But this is a company that is still growing 20 to 30%. So what's the problem?
Well, the problem is that Lulu has grown at 25% on a CAGR basis for the last 5 years. And that's been fueled by a number of catalysts. There was a wave of e-commerce growth where e-commerce went from 20% to 30% of sales in a couple of years. There was the COVID athleisure boom where we all stayed home and wore athleisure for a couple of years. And there was a pent-up demand run this year where we were back to kind of social occasions, and there was a lot more spend on things like Lulu's belt bag and some of their outerwear and lifestyle wear. We're not seeing that kind of catalyst again in 2023. And so we're going to see a big deceleration in the growth trajectory. We're not going to see 20+% growth anymore. I'm modeling more like low teens growth. And the problem with that is the entirety of the earnings growth for the stock comes from the top line. Almost all of EPS growth comes from sales. And so we're going to see a big deceleration in EPS growth from 33% this past year to something like mid-teens. And that means that the multiple is going to have to take more of a haircut than it already has. So it has knock-on effects for not just sales, but also earnings growth, and then also the multiple. So it's a triple header on Lululemon, and that's not to say it's not a sustainable growth story. It's just that correction is needed right now to reset expectations to a new level of growth.
No, and the margin warning was perhaps a signal that we got from the ICR conference a few weeks ago. But just to play devil's advocate, Aneesha, the bull story on Lulu has always been that they're still very small, and there's a lot of runway for growth and expansion, whether it's in international markets where they barely scratch the surface, in stores where they've only got a few hundred, and in wholesale where they're not really even playing yet.
Yes, but if you look at the mix of sales, international is only 20% of sales. 80% is North American sales, of which the vast majority is in North American women's, which is their core. And that's the maturing part of the business, which has been soaring the last few years, but will face tough comps and will slow down as we've seen the consumer become more cautious, spend more on promotions and less on full price, and pull back spending. And we're seeing that across the sector. So yes, international is a huge growth opportunity, but China is small as a percent of total sales. And, the new products that have done phenomenally this year, like the belt bag, are a tiny part of the overall sales equation. So the vast majority of the business is contingent on strong demand from North America women's product. And that is where we may see more of a deceleration than people think.
Aneesha, it's an interesting call. Thank you for joining us to talk through it. Aneesha Sherman.